Hi, this is Dr. Bob Rubin from SafeMoneyProducts.com. Have you heard about how the US dollar affects your equity trades? Do you know how to protect yourself? You will after you watch this video. A powerful trend has emerged over the last few years. When the US dollar index goes up, the stock market goes down. When the US dollar index goes down, the stock market goes up. What's happening? Stocks are an asset like any form of property. When the value of the US dollar goes down, it takes more dollars to buy the same asset. Stock prices rise. When the value of the US dollar goes up, it takes fewer dollars to buy the same asset. Stock prices fall. Other assets work the same way. Commodities also rise and fall in the opposite direction from the US dollar. Even collectibles like art and antiques can work that way too. This trend hasn't always been with us. What's new is the speed the US dollar changes value now. The US dollar has been bouncing up and down very fast. Currency rates usually change slowly. When big currency changes happen fast, in weeks instead of months or years, stocks are revalued just as fast. U.S. economic uncertainties are driving fast changes in U.S. dollar value. European and Asian economic uncertainties also drive fast changes in the value of the U.S. dollar relative to European and Asian currencies. U.S. government policies are pushing the U.S. dollar down despite short-term bumps. Near zero federal funds rate, quantitative easing, the Federal Reserve Bank buying U.S. Treasury debt with printed money, federal stimulus spending, rising federal deficits. The long-term trend of the U.S. dollar will stay down while these policies are in place. How to keep your equity trades safe? The basic problem is the uncertain value of the U.S. dollar, so the basic solution is to diversify away from the U.S. dollar. The two chief ways to cut your U.S. dollar risk and make safe money are buy foreign assets and buy physical assets. Let's talk about foreign assets. An equity trade done in a stronger currency than the U.S. dollar will keep you safe. For example, the Australian dollar rose about 25% against the U.S. dollar in the last 6 months of 2010. So if you owned a share of Australian stock during those 6 months, the price could have gone down 25% on Australian dollars without costing you anything in U.S. dollars. Most big U.S. brokers now do equity trades on foreign exchanges. Many big U.S. companies also make a lot of their money overseas. That protects them and their shareholders against a weak U.S. dollar. The average S&P 500 company earns 44% of its revenues overseas. Some examples: Intel, 79%, ExxonMobil, 69%, McDonald's, 65.5%, Procter & Gamble, 57%. You can also just buy foreign currencies to balance your equity trades. There are several ways to do it. You can buy FDIC-insured foreign currency CDs from some U.S. banks. Everbank does this. Buy currency ETFs. There are ETFs for the Australian and Canadian dollars, the euro, the British pound sterling, the Swiss franc, the Swedish krona, the Japanese yen, and the Mexican peso. You could also buy options or futures contracts on foreign currency. You could even buy actual foreign currency through a foreign exchange dealer. Now let's talk about physical assets. Physical assets, things you can touch and that people use, keep their value. If the U.S. dollar goes down, physical assets will be worth more dollars. You can use lower risk physical assets, such as commodities, to balance your higher risk equity trades. Commodities include metals like gold, silver, or platinum, energies such as oil, gas, or ethanol, grains such as wheat, corn, oats, and soybeans, meats such as cattle, hogs, pork bellies, softs as they're called, such as cotton, orange juice, or lumber, There are several ways to buy commodities. Buy commodity ETFs, and there are many such ETFs. You could buy stock in commodity producers like oil drillers or gold miners. You could buy stock in companies selling goods or services used by commodity producers, such as equipment to operate mines and wells, things like drill rigs or tunneling equipment, farm supplies such as seed, fertilizer, and pesticide, commodity transport like tankers, pipelines, or trains, commodity storage such as tanks or silos, commodity trading services such as commodity exchanges and information services. The big question, of course, is what should you buy and when, and how do you balance profit and safety to make safe money? Now that you know about equity trades, take action with SafeMoneyProducts.com to get 4 free reports and buy monthly action alerts. This is Dr. Bob Rubin wishing you good, safe investing.